All right, and we're live. Everybody, welcome to the Sunday live stream. And of course, every Sunday we get graced with the presence of Jerry V. Hall. Jerry, thanks for stopping by again on this beautiful Sunday.
Hola, hola, todo.
Hello, everybody. So today we got some pretty interesting things to talk about. We're going to talk about Q4 is upon us. We've got October, November, December coming in. We got a big week next week with the Fed decision and different macro events. But I really think now is the time to really think about what we're going to do. Failing to plan is planning to fail, right? So we need to talk about, is this the time to like dump everything and get into it? Like I think some people did last night, but of course they woke up and you're like, hey, why is it down? Maybe dollar cost average. Or is this the time to do nothing and wait for the Fed decision? Or is this like an everything bubble? And I will just say, if you want to follow Jerry, and after this, you're probably going to want to. He's a great follow. But if you look for Jerry in over on the Xverse, just know that he has a lot of spam bots and fake accounts. So if you just check out the link in the description, you can find Jerry on X. And at some point, maybe even a YouTube video if he ever gets around to it. Okay. So today, let's talk about this everything bubble. I want to introduce you to, I always get this guy's name wrong. Hershey, right? Heresy. Well, it's heresy. But he's got a great channel, and he had this really great video. And I linked in the description. And he talks about it's not an everything bubble, it's a dollar collapse. And we've heard this same thing for a long time, have we not? The dollar's going to collapse. Take a look at the DXY. It is collapsing. It'll keep going down. It'll go to zero. And maybe that's true. And if heresy is right and history repeats itself, which all fiat does go to zero, then should we be selling anything? And the point that he made in that video, which I recommend everybody should watch, is that he's like, look, the money printer is never going to turn off. The M2 money supply is just how it is. It keeps going up and to the right. So are you a better investor, or is it just because there's just too much money flooding the system? Also, you can take a look at everything that's as far as prices increased. I don't have to tell you this, but you know it. The housing index. And we're going to see that over all countries. It's just going up and to the right. Housing. S&P 500 hit an all-time high this week. And also gold hit an all-time high. And the crypto market almost hit another all-time high as far as the market itself. So the question that we have is, first of all, do we have some type of exit strategy? And should we even have an exit strategy, or should we just stay into crypto in itself and never get out and come in here? This is going to be an interesting topic. Jerry, I'm going to start with you. You tell me what you think here.
Well, so this is just my life experience, right? So I turned 60 years old in a couple of months, and I spent 50 years on this planet under the understanding and context that things just got more valuable, right? And I saw that with comics as a kid and baseball cards, and then eventually as I got into construction, I learned about real estate and these things. It wasn't until I found Bitcoin in 2017 that I started to understand money, and my perception changed when I realized that it's the devaluation of the currency, the denominator in which I'm pricing all these things, that is changing, not the things themselves. Like, for instance, an acre of real estate in Sonoma County, undeveloped, didn't change from 1975 to 1990. It in itself did not change. The dynamics and value proposition did, though, change when you factor in its relationship to the denominator, which was the US dollar. Right? So why all of a sudden in 1990 is this 1 acre that's been there since 1975? I bought it for 10,000. Now it's worth 100,000. Why? It's not because the value of the property went up. It's because the actual denominator, the thing that it's being valued in, that dollar of currency unit, devalued. And Bitcoin educated me to that. The understanding of finite as opposed to infinite, right? Scarcity, these type of things. And it was just my whole perception of this topic changed dramatically with that new understanding. And so I look at these things differently. I don't think real estate's necessarily more valuable. It just costs more. And that's a dynamic switch in how I make decisions, et cetera, et cetera. And I don't think I'm the only one who's learning these things and coming to these understandings. You obviously have.
Yeah, I've got it. So we know that the prices are going up and everything if we're denominating everything in the dollar. But my question then is Jerry, if that's the case, should we hold on to all crypto and digital assets and not sell anything and just let everything go up? And of course, we're hearing the same narratives as before, right? Super cycle. This time it's different.
Let's go back to that for a second. So a classic example would be something. I'm sorry, somebody's trying to call me and they must not know I'm on a live stream.
It was me, Jerry. I just want to make sure you're here. Okay.
So no, you don't hold on to everything because not everything is valuable. Again, back to understanding value, right? Do I hold on to this old paintbrush because it's going to become more valuable over time?
Right.
No, I don't. Do I hold on to my Bitcoin because I believe it will become more valuable over time? No. Do I believe that the denominator that it's in value in will decrease? Absolutely. That kind of thing. So you don't hold on to everything. You hold on to the things that are valuable. They will become more valuable. Not everything becomes valuable because the dollar compresses in value or diminishes value over time. Not everything is worth holding is what I'm trying to say.
You're right. Not everything. So I want to make that crystal clear before we move on, because if we're talking about, because people will say, well, if the dollar is going to collapse and this is an everything bubble, and it's not a bubble, it's just the dollar that's collapsing, wouldn't it be best just to hold it into all assets? Which does make sense because we talk about assets.
Yes.
And I took a page. I took a look at, there was a tweet from Paolo Arrodino. I can't say his name, the Tether CEO. I know I butchered his name. You can tell me in the comments section. But he said that Tether is investing essentially into three things to shore up Tether. Bitcoin, makes sense. Gold, also makes sense. And land. And those are solid assets. Now, if we go outside of that and we say, well, what about other assets? What about other digital assets? Like, that's what we're here for. What about Ethereum? What about Solana? What about Cardano? What about Pepe? What about Avalanche? What about Fartcoin? What about Aethir? What about Avantis? Whatever. So I think this is where we kind of get in the weeds, where people say, well, I just heard assets, and I'm just going to hold on to these because that's what we talk about. And like Jerry so eloquently put it, not all these assets are worth anything. I've been on the receiving end of some bad real estate deals. And sometimes you do your due diligence and you think it's going to work out. And then all of a sudden you're like, this is a poor property. This doesn't get much traction. There is not many people actually renting, either short-term or long-term. And I'm eating the cost every single month. These things happen. And I think the big thing we need to focus on is, okay, we know that we're going to have to sell something because all of it's kind of a little inflated. And we're speculating, right? So how do we do that? And then we'll get into our own portfolios, what we're going to sell off. Hint, I'm selling off pretty much all my altcoins. But that would lead me to, like, what do we do here? What happens? And how do we play this? First of all, not financial advice. You guys do your own thing. You guys know your portfolio better than me and Jerry. We're just here to just talk about what we do. Maybe you're along for the ride. So the first thing is, actually the very, very first thing is, if you go, there is a link in the description where I talk about this stuff. It's where I say when I'm selling 80% of my crypto. And this is actually going to change a little bit because the percentage is going to be 90 to 100% of altcoins. And I'm going to probably keep more Bitcoin. And why is that? I think it's because Bitcoin has had that watershed moment. And we take a look at treasuries. This is from CoinGecko. It's pretty interesting. You can see, like, and I like how they put this, the treasury Bitcoin dominance. and all the different public, private, and governments that are holding Bitcoin, on top of the fact is if you go to BitBo, Bitcoin treasuries, did you know that as far as ETFs, countries, public companies, private, Bitcoin mining companies, and DeFi, that's almost 18% of the 21 million. And let's be honest, there's not 21 million of Bitcoin out there. First of all, we haven't mined it all. Second of all, we've lost the whole boatload. So when we're taking a look at this and we're thinking about what do we sell? Well, that's for you to decide. But I'm telling you, I'm selling everything from Ethereum down as these type of hit indicators hit. This is from coinglass.com, bull market peak signals. And people are saying, when's altcoin? When's altcoin? It's either here right now, where some people's like, no, it's not. Because my alt hasn't gone up 20x like it did in 2021. Maybe your alt's not going to go up 20x. I hate to break it to you. Some of it is just going to suck. That's it. That's pretty much how we do in investing. And talk to any VC and they'll tell you, hey, didn't work out this one, but maybe another one will. What we're looking at is these indicators to try to top off. And right now, as it stands, Enzo pointed this out yesterday, the indicators is still the hold. And as far as like selling, not that much. And this is everything from Pi Cycle, Puel, multiple, MBRVZ score, altcoin season. Although, look at that. This is the first one that I've seen it. Altcoin season index, 100% hit. Jerry, before I start rambling on some more, I need your input here. What do you think?
Well, I want to let the audience know you and I have not collaborated on this or had this specific.
No, we were talking about housing before we got on here.
But I am of the same mind. And the reason I'm of the same mind is because I want to be able to allocate brain power to other things. I don't need to manage a 70 asset crypto portfolio, right? I'm going to collapse that down to probably 5 assets. There's some darlings that I believe, World Mobile Token, for 2 reasons. One, I want to support real world utility. And the other is I think that they have a business model that actually has a chance to succeed. So I'm going to hold that token. I've invested what I've invested. I may not dollar cost average more into it, but I can sit there and let it marinate over time, and we'll see what happens. Bitcoin, obviously. And then I have a couple of compute projects like Akash and Aethir that I really believe in. I think are really strong candidates for continued success and can become, in my mind, dividend type stocks. Yeah. Right. When I'm thinking about, I want to own a company that's going to be here for 40 years. It's going to produce cash flows and revenues that are going to pay me dividends. And in this case, it's not dividends, they're staking rewards. But to me, at the end user, they're literally the same thing. Right? There is no difference between a staking reward and a dividend as far as my accountant. You know what? He doesn't care. They're both exactly the same to him. So that's kind of what I'm doing. And the reason is because I want to build a business in this space, but I don't necessarily want to manage a 70 asset crypto portfolio. And here's the caveat. I hope I'm unique in the audience in this regard. I lost my ass in 2022. $900,000 of value got wiped away from my books, which I can now part and parcel write off against gains that I'm going to be taking now.
Jerry, you lost how much? How much value did you lose in one
sitting? A little over 900,000.
Wow.
And it's my fault. I made some really bad mistakes. I rotated out of assets like Bitcoin and Ethereum and into assets like Juno and Cosmos and Sift Chain and Stargate and, blah, 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 hoping to get yield and liquidity pool stuff. And I learned a very big lesson. But the point is, I have those losses. And if any of you have taken major losses and you've documented them, you can write them off against your gains that you be taking in this bull run, which is a wonderful thing.
Yeah, that's a wonderful thing. Hey, speaking of that, speaking of mistakes, my mistake was Voyager Celsius. And
there you go.
That was a big one. And then, of course, but then you could take losses. I just saw there was a video from Aaron Bennett. And if you guys don't follow Aaron Bennett, great guy. He just put out a video where he talked about you can take all of those losses in 1 year now off of the Celsius bankruptcy. Because as before, as American citizen, you only could take a certain percentage. I think it was up to $3,000, maybe $5,000 of losses, but you had to stretch those out over, decades if you had a ton of money like Jerry or me, where I lost it. But it looks like you can take it all this year. I got to watch that video. So it's a good point to have. So we all make mistakes. Jerry made a mistake. I made mistakes. Nobody's perfect, right? But we're going to get this right, guys. Damn it. We're going to get this right this time. So, and then I think Base Bailey said we're at the very beginning of altcoin season. And maybe that is. We keep calling for it. Ben's under the belief that we're going to increase Bitcoin down over the next 3 to 4 weeks, and then we'll slide into an altcoin season. I'm under the belief that that probably is what's actually going to happen, except for a specific few alts they're going to run. But Bitcoin is going to start to absorb everything, especially when we see stuff like this, where we have these Bitcoin treasury companies, and they're just gobbling up everything as much as they possibly can. So it comes down to this. I don't know what you're going to do as far as like for you yourself, but me, I'm still dollar cost averaging certain altcoins. And those are like the big ones. Those are the Ethereums, those are the Solana, those are the Trons, those are the Cardano, those are the Avalanches, those are the Swees. I mean, it's a lot. I'm pretty much going broke on my bank account, but that's me. That's not something you should do. If you have bills to pay or you need to put a roof over your head, you do not do what I do. That's ridiculous. But I just feel like I've been through this story before. I'm going to stay for some pretty high conviction alts, and then I'll go into some D.A.N stuff. I will take refuge with my friend Bobby, ask him for some advice every so often, and get into some crazy stuff. Not too much, but I still think Q4 is going to be big. And if it's true what people think, like we're going to get into this Bitcoin dominance where it goes up, so much the better. That means I'm going to be able to buy at lesser amounts as it goes down, because if things are flowing into Bitcoin. And then when I get into Q4, that's when I start to unload. So that would lead me to the last thing, which is, well, one of the last things I should say, is the exit strategy. We talked about this yesterday. Jerry, I don't know if you've seen this from Ben's website, Into the Cryptoverse. This part is a paid part. The DCA part is free. But if you want to check it out, links in the description, 10% off the first month. No shame. All right, so here we go. I'm going to steal this from Ben. So yesterday I showed you this, but I want to show you something even easier. The exit strategy is whatever coin you got, right? Just whatever, all this stuff. And this kind of, Bitcoin, ETH, Cardano. Which I got to tell you, Cardano's been kind of a laggard. Let's just say you got one Bitcoin, right? And I went over this yesterday, risk bands and strategy and all this stuff. And then here's the dollar amount. But did you know if you just hit this button here, the percentage, bam. Now what it shows you is this. The hodler, when you're into the risk band of 0.75, which if you take a look over here, what is 0.75? That's when Bitcoin hits 184,000. That's in the middle. You sell a third of it. And then when it hits the risk level of 0.85, you sell another third, and 0.95 a third. And you can do something like that. You can make it linear, where it's 10, 20, 30, 40, 7, 13, 20, 27, whatever it is, 33, or exponential, meaning you essentially are doubling, roughly doubling everything, depending on which the wristbands. And if you're looking for those wristbands, they're all right here. And if we're going to use, where the heck did Bitcoin go? Ah, wow, Bitcoin's wristband is pretty low, 0.54. At the tippy top, it's that 299. Just saying. Anyhow, that's just one way. Jerry, what do you got for exit strategies? Have you thought about it much? Are you thinking about it? Or are you just like, you know what? I'll know it. It's like art. I'll know it when I see it.
It's interesting that you asked that. So I remember when I first started my YouTube channel, and I was getting a lot of people to help me, and it was really just the documentation of my financial literacy journey. And I remember putting so much time and energy into an exit strategy, right? I mean, it was complex. It was rotate out of crypto, get into traditional certificates of deposit, earn X amount of yield, have X amount of income, have X amount of this. It was so detail oriented. That was in the first year of my journey of financial literacy. Here we are 6+ years into this journey, and I'm now kind of at the place of, I have goals, like I want to build my home, and I want to develop my property, and I want to do these things. And I'm looking at now, not the minutia of a spreadsheet, but the tax implications, the loan to value ratio of the property. How much am I borrowing versus how much am I cashing out versus how much am I doing this? So the tools that I'm using to inform my exit strategy are completely different today than they were when I was developing an exit strategy with the same goal of developing my property for my forever home 6 years ago, right? And so I think that the best thing that I could say to that is that everybody should kind of factor in, what do you really want in your life? Quality of life, the surroundings, the environment that you want to be in. And then invest in and then exit to meet those goals. Don't necessarily look at a spreadsheet and say, at 1.5 million or 1.76 million, I can call it quits. Because guess what? That denominator of the 1.76 most likely is going to change what it can do and how much it can get you when you finally get there.
Yeah.
You know what I mean? And so everybody's going to have their own little application of this, like you just said, this art, this process of getting to, what is it that you truly want? What are these investments going to bring you and your family? And then build to that. And remember that what's hot and cyclical this cycle could rotate out of favor next cycle. And that's where that whole active management stuff comes in. So there is no set it and forget it schedule.
Yeah. And then people will say, they're like, well, Michael Saylor tells us to never sell anything. First of all, you're not Michael Saylor. I'm not Michael Saylor. I don't have a $1 billion company where I can just start issuing stocks and just start to ram it down that way. I can't do that. So I have to play a little bit different rules than the billionaire that is Michael Saylor. And, thankfully he's here and everything's going to stay above board. Let's hope so. Right. But for me, like, there's certain goals that I want to have, which are vastly different from people in the audience. Maybe they are like, I want to give this to my kid. I want to give this to my grandkid. I want to just have a kid. I don't want to be homeless, whatever it is. So whatever your goals are is for you. We're just talking about ours. And I think, like, for me, when I look at things like what you just said, Jerry, where you said, I want to take out 1.5 or 1.76, or if somebody was like, I just want to take out like, $500 and be able to have a good meal. Great. But I think just going all the way back to the very beginning, when we took a look at Heresy Financial, and he was talking about how the dollar is imploding, essentially, and the DXY is getting weaker. I still think it can get shored up with what President Trump is trying to do with stable coins and essentially being Web3, TradFi to Web3. So I'm going to play it by ear. But right now, instead of me selling 50% of my Bitcoin, I think I'm going to hold on to a lot more of it. Maybe I'm only going to sell about 20%. Because at some point I'm like, I don't know. I just don't know. But altcoins, I'm telling you right now, I used to say 80%. It's going to be more like 95%. Actually, it's going to be mostly 100%, except for a select few, which I think are going to do pretty well. And I'm going to keep around 5 to 10% of those. And that's what I'm going to do. Let me know what you're going to do in the comment section. Jerry, want to add anything onto that?
I do. And I think that it's really important to have context as an investor, right? And so obviously every Sunday when you and I get together, I'm bringing the context of an investor. I'm not coming here talking as a contractor or a carpenter or a painter or an electrician. I'm here, we're talking about investments and that such. So what's super, super important to me to bring context to this new Web3 world, I'm bringing a page from Web2 in my legacy, and that is, how many companies were investable 40 years ago that are still investable today? Right? Very few. However, the few are very important to understand. What are they? Insurance companies have been a great investment as far as still being here 40 years later. Are they the most profitable? No. But if you start applying that same kind of thinking to these assets that you're investing in, for instance, if you really do your analysis, let's take a look at a product like Fetch. Fetch AI is an AI play with a layer 1 on the Cosmos SDK platform. Okay, great. It's an AI play. I was lucky enough to get into it prior to the ChatGPT boom. So I've seen tremendous appreciation in the coin since I've had it. It is something that I can stake and earn a yield on. So I've got a compounding yield mechanism that I turned off about a year ago. And now I take all of my yield and buy Bitcoin with it.
Really?
While maintaining my, 5,800 FET tokens or whatever the number is, right? And so here's the thing now. Will that still be valuable like Coca-Cola 40 years from now? 40 years ago, Coke was a great investment. It's still a year-over-year profitable stock to own.
Right.
Will FET be that? I don't know. I believe Bitcoin will be. So I apply that same kind of thinking. What is cyclical? What survives a cycle? And what most likely will die off? Meme coins, I do not think are long-term.
No.
Right? So if I'm playing that game, I know it's a very short window. The same with any kind of trendy thing. I know it's cyclical, it's very cyclical, but what could be long-term? How about that project on Algorand that invests in real estate? That might be something that'll be here for 40 years.
Right.
That's possible. You know what I mean? So I think we need to understand the lens that we're looking through before we get too carried away in side topics.
Right. That's why I'm selling most of my alts, because just go back to 2021 and remember how big Luna was and Luna was the evolution of finance. I mean, go ask Rand from CryptoVerse, and he'll tell you. I mean, I don't know how many millions, 100 million plus, I think he lost. I mean, he said it in some interview. And that was backed by everybody. And it was going to be the next big thing, and it was going to be awesome. Mike Novogratz from Galaxy Digital, who's investing heavily into Solana right now as a treasury company, he has a tattoo of Luna on his arm. That's how much he believed into it. So if people are going to sit here and tell me, like Jerry, that was a great point, that it's going to be here for the next 40 years, I'm going to tell you, I don't believe you. If you tell me that Bitcoin could be here for more than 40 years, I have more of a leniency towards that, because it's the most battle-tested crypto that we possibly have. And we can see it's being adopted by nation states, also by treasury companies, also it has its own ETFs, public and private companies. So that one I get. But any altcoin right now, I'm sorry. There's no way I'm sticking around, or it's going to stick around for 40 years. Most will fail. And only the cherished few are going to actually make it.
May I add one point to that, Rob? Because I think it's super important. 10 years ago, had you read the Bitcoin white paper, the context of which Bitcoin was built for and to be used for is actually completely different than what the market has decided its best use is.
Right.
There's a very real possibility that there are projects in our field of influence, what we're seeing, that migrate from their stated use case because they fit a different use case that the market actually wants. I don't know what those projects are, and I don't know what they will morph into, but we need to understand that happens. Just like Bitcoin is not digital cash. We do not use it as digital cash. It's matter of fact, you are not incentivized to use Bitcoin as a form of a medium of exchange. You're not. Matter of fact, you're penalized. Taxes and, you know, capital gains and things of that nature that don't apply to stable coins. Therefore, you're incentivized to hold it, right? So what other projects may morph and have different use cases? I don't know, but I guarantee it'll happen. I just don't know what it is or which one to hold that will do that. So I'm, you know, I'm like you. I am going to have a low maintenance crypto portfolio within 18, 24 months from now.
Yeah. You know what, I'll piggyback on what you said about there's no incentive for the retail person to spend their Bitcoin as a peer-to-peer transaction because you get penalized for capital gains. I mean, what a nightmare that would be. You buy Bitcoin for 100,000 and then you get like $100 worth, so many Satoshis. And then you walk down the street and you go buy cat food, I don't know, and Bitcoin goes 110,000. So now you have short-term capital gains because you spent it by using whatever Bitcoin card that you actually have. And it's like, well, the cat food was on sale, but now I got to pay these short-term capital gains because I'm in a 38% tax bracket and I got screwed. And I paid double for my cat food. But there's a difference between, I think, the retail and the businesses that accept Bitcoin for cash. Like there was an article about Steak and Shake. They just took Bitcoin transactions and they were so happy because, like, look, for Visa and MasterCard, they're charging us, I think it was like between 1% and 2% plus so much cents per transaction. But with Bitcoin, I guess they were using Lightning because it was very cheap, or it was on the other person to use to send them Bitcoin. So like, this is awesome for us. But for retail, it's not here yet. I think Bitcoin, to me, I just see it as a store of value. And you can just take a look as far as like, I mean, eggs, chicken, food, houses, any kind of real estate and stocks. And you can just kind of overlay that. And you can see that the value of Bitcoin, well, the price of all these goods go up. And then it only takes much, much less of Bitcoin to do. So I know people will say, well, is Bitcoin a scam? 15 years later, and it's still the best, most highest performing asset in any asset class so far. So I think it's still pretty good. Okay, so we beat that horse to death. Let's just talk about one last thing, which is the most D.A.N stuff we can talk about.
Okay.
I feel we're going into Q4. Jerry's also, this will piggyback on what Jerry believes, which is TradFi going into Web3 and how great that is. If we're going into Q4 and we see an explosion, whether, you know, we have Bitcoin dominance going up, probably, or we have altcoins taking off in November, I could see it, December. The question that you have is, what is my money doing for me in my bank account? For me, that's what I always look at my bank account and go, what are you doing for me? Laziest checking account I've ever had in my life. You don't do anything for me dollars. You give me 0.43%. What do I do with this? Well, we put into Bitcoin and blue chips, but then we gamble a little bit, or I do. My friend Bobby really gambles. But we talked about this yesterday, and we're just taking a look at, well, this is today. Market cap is 4.139. Bitcoin's at 115,043. Ethereum is down 1.5%. XRP is down. Solana's up. It doesn't really matter. I mean, I think things are doing relatively well. But we talked about this thing called Avantis. And you can see right here, which is kind of funny, Avantis is up 91% in 24 hours. Now look, this was told to me by a friend. I didn't discover this myself, but I told you yesterday, I bought some already. And if you don't sell when it doubles, I will dump on you. I will dump on every single person in this comment section. And I stand by that. So I am almost at 100%. I'm going to dump or sell half of this because that's what I have to do. However, if you'd like to take a look at this, and no one sponsored me before I get that question. But again, this is like, it's a platform that you can do leverage plays up to 500x. I'm not doing that. You can do that, have fun. But it's backed by Coinbase and Pantera Capital. And it just got released on the 9th of September. So it's very, very, very early. And the tokenomics look relatively good. It's 1 billion tokenomics. Right now, they've only got around 216 million or so. But the investors, they hold 26%, and it's a 12-month cliff, meaning they can't touch it for a year. And then after that, then they can dump on you. Foundation, 0% of TGE, but it's linearly over 24 months. Liquidity reserve, that's for the actual exchange, I guess it was. And what you can do, it's all about, let me go back. You can trade crypto, Forex, metals, commodities, indices straight from your wallet. It's on Base, and what I was surprised about is that it's listed on Coinbase, just like that. Even though for some reason they couldn't find the time to list Cardano or XRP for years, and they still haven't listed Tron, even though it's like in the top 10, whatever. So if you'd like to look into that, I linked in the description, but it's already around 91%. It'll might go down, might go up. I have no idea. But Jerry, what do you think about this? And also, if you're an American, you can't use this. So I just found it out the hard way yesterday.
You can invest it. You can buy the token on Coinbase, but you can't use the platform.
Yeah, exactly. Because Coinbase has high standards.
You know, Rob, there are going to be a lot of very short-term windows to take advantage of things. And so you got some info. You made a bet. This particular bet happens to be paying off, which I'm really happy for you. There have been many times where a friend has said, hey, take a look at this. I went and put $500, and the next week, in 7 days, it's worth $25. So yes, it goes the other way too. There will be plenty of opportunities for all of us to catch something like this. None of us will get rich with that. It's not a repeatable process. And that's my thought on that. And for the beeping in the background, folks, I'm sorry. I'm moving. I'm breaking things down, and that's a battery backup telling me you're not plugged in. And I didn't think about that before the show to go plug it in, so I apologize.
Oh, it's okay. It's gonna be okay. It's gonna be okay for vibration and noise. Well said, Jerry. And that's it. So to me, like I look at this Q4 as like time to get rich. And I mean, things could go sideways, right? We could have World War III breakout. We could have tariffs go crazy. We could have Jerome Powell go, you know what? I'm out of here in May, so no rate cuts. Have fun, suckers. Good night. Who knows? I don't know. But historically speaking, Q4 is a pretty good time. And I'm putting my money where my mouth is, and maybe it'll work out. Maybe it won't. But historically speaking, as far as odds go, I feel pretty good about this. M2 money supply is increasing. That's United States and global. Rates will probably go down. I mean, me and Jerry had a disagreement last week, but I think we'll be okay. And then we've got companies gobbling up, not just, did you know this? It's not just Bitcoin. Check this out. Over on CoinGecko, they have the treasuries. You can take a look at the Bitcoin treasury, Ethereum treasuries. Look at that. Treasury ETH dominance, almost 3%. And then the Solana public companies that are buying at 1.2 treasury sold dominance. So I just take a look at those. I'm like, those will probably do pretty well. As also on top of the stablecoin chains, which is, of course, Ethereum, Tron, BNB, and Solana. So that's my thought process. I'm going to go as deep as I can until my bank calls me up and says, hey, you're broke, and see where it leads me. Jerry, what do you think? Bad strategy?
I don't think you can go wrong. I think it's very clear the trends have been identified. AI, stable coins, right? I mean, Web3 is expanding, right? The compute behind AI, so chips and electricity, these things have become very clear that is the expansion. And so I don't think you can go wrong if you're at least exploring, researching, and investing in that vertical.
You know what? That was a good point. Before we get into Q&A, let's take a look at categories. Let me see if they have an AI category. Artificial. Oh, there it is. Let's see what kind of projects Jerry, which ones of these do you like? Near protocol?
I do like Near, although it's really interesting. My reason for getting into Near, and remember we talked about things changing. Near was supposed to be the better Ethereum that Coinbase was going to adopt and build off of, but what they actually did was built based on Ethereum. So I don't know. BitTensor, I love. Render, I love. Fet AI, I love.
Yeah, that's a good one.
Scroll down a little bit more. Our Wave is good. I like it. Akash is a big, a huge proponent of Akash. I don't see Aethir on this list, but Aethir is in there. And then Hypercycle.
Where the hell is Aethir?
I don't see it. Is it so far down that it doesn't make the list? Are you kidding me?
No.
Maybe the person that curates this index doesn't even know it exists, even though it's on Ethereum. I mean, it's not like it's on some unknown chain. It's had a nice little growth over the last week.
Yeah, it's ranked 153, and
well, be there.
Yeah, it's been out for about a year and a half. No, a year and 3 months. But yeah, look at this.
Oh, it's been good for me. I'm telling you, I am not at all displeased in its last 7 days.
90%. And we actually talked about this.
I learned about them from you.
Dan,
this channel introduced me to Aethir.
Yeah, there's Jerry. Let me tell you, what a great thumbnail. Wow. Oh, here it is. Yeah, about a year ago, I talked about Aethir. And it just goes to show you, like, sometimes you just, when things double, you take profits. I couldn't because I got in as an early investor. I got in, I had a 12-month cliff. So I couldn't do anything. I just said, I think this will be pretty good. And I'm glad it actually worked out like that. Anyhow, well, that's it for today, everybody. Maybe it's 42 minutes, Jerry. We're going long. That's it for today. I hope that we were all over the place. I apologize, but there's a lot of things to consider. To backtrack, I'm going to be selling less of my Bitcoin, a heck of a lot more of my altcoins. I believe Q4 is going to do very well. I'm looking for specific indicators. There's a link in the description called when I'm selling 80% of all my crypto. That, on top of that, with coinglass.com, you can see most of the indicators which I am going to be following. And then when I sell, I'll be back on here saying, hey, everybody, I sold today. And it'll be in tranches, probably 20, 25% per piece. And that's where I'm at. I still say that Q4 is going to do well. And hopefully that made sense. And now, if Jerry wants to add something, add it, and then we'll do a little Q&A.
No, I think let's go right into the questions. I think you and I are in alignment in a lot of that we want to simplify our portfolios, get them down to, if I can just tell you the top 5, have 5 things in my portfolio of crypto, I think I'll be fine. Obviously, I've in my investment journey where real estate is an important element because it represents like the rest of my life. Like I can live on my property and build my home and stuff like that. Not to mention, as the world's come out of this COVID, we've seen the things that can bring value to real estate, like Airbnb, property rentals and things of that nature, since COVID have really come back. These are industries that have come back alive. And I think we don't have another COVID type situation, there'll be ways to monetize real estate that'll be exciting and fun and profitable. Therefore, I want to be a part of that. And so minimize the crypto portfolio, put more attention towards my real estate portfolio, and get to the point where the biggest thing I've got to concern myself with is, did I shave before the Sunday live stream with Rob? That's
a pretty heavy responsibility on that last part. That's well said. And then now, everybody, thanks for staying. If you got to go, take off. I know Sunday maybe there's a little football you want to watch. You want to hang out with your family. You want to hang around with us too much. That's cool. I mean, I've got almost 2,000 people between Twitter and YouTube. So thanks for almost 2,000 of you hanging out with me and Jerry today. That's pretty great. We appreciate it. But now let's get a little Q&A. I'll answer all your questions. We'll answer all your questions to the best of our abilities and go from there. Also, shout out to Amir Testis. He gave us a $1.99 super sticker. Amir, thank you. But again, I tell everybody, don't, if you just have this burning urge to give a super sticker, it's nice, but keep that as super stickers and just invest into Bitcoin or whatever altcoin you want to. But I appreciate it regardless. Okay. Gas fees on fire today. The dumbest thing no one can think of will probably bring retail back in. Jerry, what's going to bring retail back in? That's the big question. Probably these bells.
No, I think I'll be honest. I think it's going to be more attention. So when we take a big leap, like the next 30%, 40% bump in Bitcoin will be another one of those things that and the commencement of a liquidity cycle.
Right.
Rob, you muted yourself.
Oh, shoot, sorry. I was unfortunately trying to mute the bells. I was going to say, if we just take a look at the M2 money supply, there's liquidity there. We see global liquidity. We see American liquidity. We see most of the countries that are printing cash, euros, yuan, renminbi, peso, whatever. They're all printing like crazy, and that's going to flow into something. Hopefully, people don't hoard it. They do something smart, which you get into assets. That's what it comes down to. Vatican says Pepe or things like Pepe going to bring retail back. Probably so. I think it's going to be a different one this time. I don't think it's going to be the meme coins anymore. I don't think it's going to be NFTs anymore. I don't think it's going to be even real world utility anymore. I just don't. Like look at Chainlink. Chainlink's done pretty good, right? But then look at like Pepe and like this one called M. It's like meme book or something. It's like in the top 70 right now. It does nothing. And but people don't care. And you take a look at real world utility. World Mobile is a prime example, right? They have their own functioning, World Mobile and Helium. They have their own functioning mobile service. And yet they should be to the moon already. And they're not. So I don't know what's going to bring it back, but it's going to be, I think Vatican's right. Something that's just crazy. Let's see what else we have. Did you know this, Jerry? ETF delays until November. Is this the XRP, Solana? And I think there was one more ETF. Chime off in the comment section. But I guess this was supposed to happen recently, and I guess it got pushed to November, which isn't too bad. Well, first of all, wouldn't that be great? We're in Q4. They delay it from October or whenever it was, or end of September to November. It's like perfect. Everything falls into place. Q4 big pump. What do you think, Jared?
This is one of these bureaucratic type situations. There's a lot of different reasons they posture elements like this, right? I think we should just not get concerned with Q4 on these type of elements. I think you'll see a lot of that kind of stuff open up in Q1 of 2026. Mm-hmm. I can't put my finger on it, and it's real speculation, but I think there are some contributors, people who contribute money to campaigns, and Congress people are talking to regulatory people and creating a stink in that let's delay this a little bit. And I don't think it has anything to do with what's in the American people's best interest, but what's in some of these people's best interest. Let's put it that way. That's my take on this, because there's no reason to delay these things. We understand the format and the playbook. It's been clearly rolled out with the ETFs for Bitcoin and Ethereum.
Yeah, that's true.
So it's not like we're developing a new thing. This is cookie cutter, boom. So there's other reasons for the delays and all that kind of stuff is all I'm saying.
Makes sense to me. Let's see. PHX, how many points will Chair Powell cut? 25 or 50? Jared says 0. I say 50. It'll probably get 25, and both of us will be wrong. We'll see.
ChatGPT And this is really interesting, which is kind of, you know, and I asked it to take a pulse of the most people who are talking about it.
Yeah.
There seems to be the consensus is that 75 bips will happen prior to January 1st, 2026. If that were to happen, 3 separate 25 bip reductions, I think those holding some of these top 10, top 15, top 20 coins will see an immediate appreciation schedule, because what it will do is it will have that stage 1 of the liquidity cycle will be flagged. In other words, it'll post the flag. We are starting a liquidity cycle, and you'll see some things that aren't already priced in become the pricing. Boom.
Right. You know what? And this is the one thing that stops me from just going like lump sum is Jay Powell. We don't know, you know, what kind of reasoning is. I mean, if they're data dependent, they really should cut those rates. But, you know, they might they say, you know what? We know about the job market and that sucks, but we've got some issues with, even though it came in expectations, inflation. And that's my mandate. Even though we got a dual mandate, we're just going to stick with inflation. We'll fix the jobs later when, you know, nobody has a job. Yeah. So if that happens and we get like no cuts, do you know what the market's going to do? That first, I mean, the market's inevitable, right? Because of the money printing. But that first 24, 48, 72 hours, it's going to be brutal. I think
those people that were trying to front run the Fed for sure. Yeah. All the front runners will be forced to make a decision. And this is where, as a retail person, we need to understand there are markets on top of markets and underneath markets. In that,
yeah,
if there are people front running in the derivatives world, and they are and they are taking positions long or short, if the thing they're front running doesn't come to fruition, it changes that market. And when that market changes, our market changes. So when the derivatives market change, longs or shorts, get compressed or liquidated, or whatever terms you want to use it changes that market structure. It will have an effect on our actual retail price. And we'll see that. Even though there may not be mass selling of Bitcoin, there were mass liquidations in a position against it.
Right. Yep. And for everybody asking me about the bells, when Jerry has a good point, I put on the bell sound, and just to cheer him on as he's making his points. That's not the church in the background. That's me. So if you like how I'm doing that, sound up in the comment section. Let's see. Meme says, great conversation about freedom of speech. Warrior says he has to cut, job losses forcing his hand. It's only a matter of how much, perhaps. Oh, this is a good one. Jupiter says poly market 91%, 25 basis points cut. You guys are so sure you should put some money in picks. Jupiter Mojo's right. Let's take a look, first of all, at poly market. And here we are. Fed rate cut in 2025. Well, I think everybody's pretty much there. Let's take a look at the Fed. Okay. Fed decision in September. 7%. This used to be 9%. Now people are backing off on me. And it trickled on 90%. Although there's Jerry, 3%, no change. Wouldn't that be something? And see, this is the thing. Like
I'm saying only go for Q4. I am not talking about indefinitely. I am only speaking about Q4.
Yeah. Only Q4. I look at this and I think, you know, if he comes out and says nothing, the markets will tumble, and then people will sell like crazy, and there'll be liquidations, of course. Everybody went long, and that's gonna leave a nice, beautiful buying opportunity for people who have powder on the sidelines. And that's the only reason right now why I'm not going all in. If I miss it, okay, so I take like a, I don't know, 5% haircut, 25% if I go, you know, roll down the alts. I don't really care too much. So yeah, I'll be fine. Let's see. When is Powell? I think it's in May, April or May. RS says, hey, Jerry, we were front-running everybody by creating these ANFEs from Hypercycle.
Advanced Node Factory Enclosures.
Oh, I did not know that.
They're super nodes. They're basically, they're computation nodes that run the AI modules, but because of their advanced nature, they are able to encapsulate licensing to use all kinds of tools. So not only is your node able to run an AI module from the registry of AI modules, it's able to implement licensing for a bunch of different tools. Like case in point, there's a tool called an aimifier. And when it's released, what it will give me, the node operator, the opportunity to do is to create an AI module out of some other software. So I can aimify a piece of software, encapsulate it in my node, and have my Hypercycle node factory, my ANFI, run that AIM. Or maybe I want to monetize that AIM because I created it. I can put it on the registry of AIMs, and other people can pay for the use of the software, the AIM, that I created. It's really, these ANFIs are really cool stuff. You have some, Rob. I made sure of it.
That's right. I got one. I think it's still, I know it's still on, as a matter of fact. Sitting around. All right. Last three. Jimmy says 50 basis points would actually shock the markets in a negative way. We need the feeling that things are going as planned. That could be true, but you know what's going to happen? They're going to spin it depending on who gets out there. The bulls will spin it as this is the greatest thing of all time. Jerome Powell should have done this beforehand. He's just catching up. And because of this action today that Jerome Powell took, he is putting the American economy first and making sure we hit our destination, or some BS like that, which will be fine. And then everybody will be happy and they'll buy. And there'll be some people like, well, you know, there's some bad things going on. I'm like, shut up. We don't want to hear from you. We want to hear from the bulls. And that's pretty much how it's going to go. But Jimmy is right. There's going to be people like, hey, why the heck do we just have to cut by 50 basis points, which is a good point. Meme says, so in other words, it doesn't matter what Powell does. Opportunities either way.
True.
That's how life goes, baby. And then lastly, LAX guy, this is pretty funny. Powell will join Gary Gensler as an adjunct instructor at MIT. Actually, I think they should both be fired because did you hear about the story, Jerry, where Gary Gensler, he had 100 or so days of his text messages from his phone just happened to get wiped out right before he was leaving. And they wanted to know that information for obvious reasons. And he's like, oh, it got wiped out. Sorry. So, yeah.
Happens every day.
Yeah.
I love what Aristotle or Plato said. He says, the only powder I have available is talc. And no truer statement has been said by somebody. If you've been in this space for more than a year, especially more than one Bitcoin cycle,
yeah,
that statement resonates. That resonates so much. We get so many opportunities to dip. There's constant dips. Always a dip somewhere for something. And having a little extra to invest can sometimes be difficult because we've seen so many incredible opportunities precede it. You know what I mean? So everybody, there'll always be another dip.
Yeah.
Have no fear. You are not late to the party. There will always be another dip.
Exactly. Well said, Jerry. And that's it for today. So everybody, we've gone about an hour. So thanks so much for stopping by. Go check out Jerry over on X, and we will see you guys. I'll see you tomorrow. Me and Jerry see you next week. Thanks so much, everybody. Adios.
Pura vida.